The gentleman is recognized.
Mr. Speaker, I rise today in support of H.R. 1210, the Portfolio Lending and Mortgage Access Act, a bill approved by the Financial Services Committee, which I chair, on a bipartisan vote of 38 to 18. First, I want to thank the gentleman from Kentucky, Mr. Barr, an outstanding member of our committee, for his leadership in finding simple ways to allow aspiring homebuyers across the nation to obtain mortgages more easily, absent the onerous regulations that are presently being applied, so that they can qualify a mortgage through market competition. The aim of H.R. 1210 is simple. Banks and credit unions should be free to originate mortgages as long as they keep them on their books, as long as they keep the risk. This is responsible lending, Mr. Chairman, and it helps more qualified borrowers obtain mortgages so that perhaps they can get their piece of the American dream. H.R. 1210, again, does this by allowing lenders, particularly hometown community banks and credit unions, to treat mortgages held on their balance sheets as quote-unquote qualified mortgages for purposes of the CFPB's mortgage lending rules. As we know, the Dodd-Frank Act made significant changes to our mortgage lending marketplace. One specific provision in Section 1411 of Dodd-Frank requires mortgage lenders to determine at the time a loan is made that the borrower has a reasonable ability to repay it. The ability to repay requirements are intended to ensure a lender takes into account the borrower's capacity to actually repay the loan. Section 1412 of Dodd-Frank creates a legal safe harbor for compliance with the ability to repay rule for lenders who issue so-called qualified mortgages, or QMs. Now, Mr. Chairman, it seems obvious that loans that are held by a lender should be regulated differently than loans that are originated and then sold to a third party. They have completely different characteristics. Again, lenders that hold the loans on their own books in their own portfolio assume all of the exposure of risk to non-performance and default. Lending 101 tells us that when the borrower is unable to repay the loan, the bank that made the loan, if it keeps it on its books, is the one that's going to lose the money and any future profit that would be derived from the loan. Portfolio lenders with poor underwriting thus will not stay in business very long. And in this sense, mortgages that are held in portfolio are already prudently regulated by market discipline. Yet without a safe harbor from the threat of litigation, which H.R. 1210 would provide, lenders will not make loans to otherwise creditworthy individuals. And we hear this from community banks and credit unions every day. If they don't meet the QM standards, the loans simply aren't going to get made as a practical matter. So let me stress, the CFPB's restrictions on mortgage lending will have a disproportionate impact on low and moderate income homebuyers, especially those from rural and certain urban areas. According to the Federal Reserve, within a few years, under this QM rule, roughly 1/3 of Black and Hispanic borrowers may find themselves disqualified from obtaining a mortgage because of the qualified mortgage rule. This is based simply on a rigid debt-to-income requirement. A recent survey tells us that 73% of community bankers have actually decreased their mortgage business or completely stopped, Mr. Speaker, completely stopped their mortgage business or providing mortgage loans due to the expense of complying with the QM, qualified mortgage regulatory burden. It's why a lot of community banks and credit unions across the country say that QM doesn't stand for qualified mortgage, it stands for quitting mortgages. It should not be the job of Congress or unelected and unaccountable Washington regulators to decide who gets a mortgage and who does not, or to force community banks and credit unions to function like regulated utilities, issuing only plain vanilla mortgages rubber-stamped in Washington for select groups. Now, opponents of this bill will attempt to derail it and branding it some kind of gift to Wall Street. Let me be clear. H.R. 1210 is a gift to home buyers, all home buyers looking for a more transparent and competitive market. When it comes to loans that are held on the books, the size of the institution does not matter. A loan held in portfolio will carry the exact same amount of risk and profit regardless of the size of the bank that holds it. Common sense legislation that is before us recognizes that the most effective way to ensure a borrower has the ability to repay is not one-size-fits-all top-down regulation from Washington. And let's again remember that the financial crisis was primarily caused by misguided Washington policies, helping put people into homes they could not afford to keep, hurting underwriting standards. Portfolio lending did not cause the crisis. So I urge all of my colleagues to support the legislation of the gentleman from Kentucky, support the American dream. I reserve the